Hello everyone, how are you all? Everyone fine? Now let us take one more case study from model test paper of May 2024 attempt. Let us discuss case study number 5. Can we start? Yes sir. What is given? A Limited is a diversified business group operating in a multiple business segment across different part of the world. Okay sir. It maintains books of account and publish its annual consolidated financial statement under Ind AS. Yes, sir. The Central Finance team has been working on closing the books of account and generating consolidated financial statement for the year ended 31st March 2003. Yes, sir. You are the finance controller and your assistant want your views on the following transaction for finalization of financial statement. Let us now read one by one each point. Point number 1. B Limited, one of the subsidiaries of A Limited, reported net income of 25 lakh. So they have reported net income of 25 lakh, which equals the company comprehensive income. So it is equal to total comprehensive income only. Yes, sir. Means there is no OCI component. The company has no outstanding debt. They have no outstanding debt. Okay, sir. Following is the information from the comprehensive balance sheet. Okay, related in cash flow, related to cash flow. So they have given some information for cash flow extract of balance sheet 31st March 2002 and 31st March 2003. So this is opening balance, this is closing balance. Okay sir. Equity share capital they have given 100. Okay sir. Further issue of equity shares, you can see 100 become 40. So there is an increase in the equity share capital by how much? By 40 lakhs. Then retained earning increased from 100 to 115 lakh. So we need to understand what they have asked in the multiple choice question. Point number 2. A Limited also operate in the travel industry and incur cost unevenly through the financial year. So they have incurred some costs which were uneven throughout the financial year. So of course might be a question of Ind AS 34 interim financial reporting. Advertising cost of 40 lakh were incurred on 1st July 2002. 1st July 2002 and staff bonuses are paid at year end based on sale. Staff bonuses are expected to be around 400 lakh for the year. Of that sum, 60 lakh would relate to the period ending 30th September 2002. The entire bonus for the entire year is 400 lakh. Out of that, 60 lakh belong to the period ended 30th September 2002. Okay, sir. Okay. Let's see what they have asked. An item of equipment X was acquired by A Limited on 1st April 2001 for rupees 1 lakh, having a useful estimated life of 10 years. So an equipment was purchased with an useful economic life of 10 years with a residual value 0. The asset is depreciated on a straight line basis. The asset was revalued to 1,04,000 on 31st March 2003. So again it was revalued on 31st March 2003. So of course 1 lakh divided by 10 with no residual value. So annual depreciation will be 10,000. So carrying amount as on 31st March 2003 means after 2 years 1 lakh minus 20,000 2-year depreciation, so it will be 80,000. Correct. And the fair value is given how much? 1 lakh 4,000. So of course there is a revaluation gain of how much? 24,000. Let's see what they have asked. Okay. Yes sir. A Limited has spent 15 lakh in developing a new product during the year ended 31st March 2003. The development cost incurred we are recognized as an intangible asset as per Ind AS 38. So entire development cost has been capitalized and that meet recognition criteria. For the purpose of computing taxable income, these expenses are allowable in full in the year of incurring the expenses. So entire expenses has been allowed. Of course, tax base will be 0. Means this, of course, from this we can understand it is a question of Ind AS 12. At year end, the company recognized an impairment loss of 75,000 against the intangible asset. In the books of account, of course, impairment loss will there. So carrying amount need to be calculated after impairment loss. Okay, so let's see what question they have asked. The company has issued preference shares that are redeemable at the option of the holder. 3 months before the end of the year, it was probable that holder would require redemption. So now after 3 months, it was now probable that it will be redeemable by the option. Even though this point is not given, can I say the principal component will be always considered as what? Financial liability, because the option is with the holder. Okay. Now let us see what the question they have asked. What cash flows should be limited report as financing activity in the statement of cash flow? For this we need to do some calculation. So what they have given, so of course can I say there will be some proceed from issue of equity share, that is 40 lakh, and there may be some dividend paid out. So for that we need to prepare one retained earning account. You can see if you will prepare retained earning account, opening balance is 100, closing balance is 115, and the net profit is given 25. So from this we can understand there will be some dividend paid. The dividend paid will be 125 minus 15, that is 10 lakh will be dividend paid. So dividend paid will be what? 10 lakh, and the issue of equity shares will be 40 lakh. What the option has been given, check karo. You can see issue of equity share 240 million. It is million or lakhs? 1 minute, let me check. Rupees in lakhs given yahan par. Rupees in lakhs given, but in the solution they have given information in million. So we need to once again be smart. Don't be confused with this. Okay. So issue of equity shares of 240 million and dividend paid 10 million, not correct. Issue of equity shares 100 million, dividend paid, not correct. So I think last option, issue of equity shares 40 million, dividend paid is 10 million, this is correct. So of course the information should be not in rupees in lakh, the information should be in millions, or the option should be given in what? Lakhs. So there is some typo mistake, I will say. So ignore this right now, this point of whatever typo mistake is there. Okay, yes sir. Coming to point number 2, with respect to the point number 2, what costs should be included in the entity's financial report for the quarter ended 30th September 2003? So of course quarter ended, so can you say the advertisement cost has been incurred on July? So July, August, September, means in that quarter only the 40 lakh will be recognized as an expense of the quarter in which it has been incurred. So of course it will not be deferred, it will not be anticipated, it will be recognized as an expense in the quarter, in the interim period in which it has been incurred. But staff bonuses, it is given that it can be anticipated at year end. Therefore for each quarter we can anticipate it. Therefore out of 400 lakh we should charge staff bonus of how much? 60 lakh. So 40 lakh plus 60 lakh, 100 lakh should be the expense of that quarter. What they have given, so advertisement cost of 40 lakh and staff bonus of 100 lakh. This is not correct. Point number C is correct. Option number C is correct. Advertisement cost of, no, this is also not correct. Option number D is correct. Advertisement cost of 40 lakh and staff bonus of 60 lakh will be related for the quarter ended 30th September 2003 as per Ind AS 34. What will be the annual depreciation charge on equipment X for year 3 to year 10? For year 3 to year 10, an amount of revaluation surplus that can be transferred retained earning annually. So of course they are asking how much revaluation surplus will be transferred retained earning during the remaining useful life. So already we have understood that 24,000 was the revaluation gain. Correct. Now we need to find out what will be the amount of additional depreciation which will be transferred from revaluation surplus to retained earning. So directly you can do, the remaining useful life is 8. So 24,000 divided by 8 is how much? 24,000 divided by 8 is how much? 3,000. So 3,000 will be transferred from revaluation surplus to retained earning every year. Or what you can do, you can find out what can be the depreciation or revalued amount. So 1,04,000 is the revalued amount divided by 8. So what will be depreciation, annual depreciation after revaluation, means from year 3, that will be 13,000, and the revaluation of original cost was how much? 10,000. So what is the additional depreciation? Additional depreciation 3,000, which will be transferred from revaluation surplus retained earning during its remaining useful life. So depreciation for year 3 will be 13,000, and how much will be transferred from revaluation surplus retained earning? That is 3,000. So which option is correct? So of course annual depreciation charge will be 13,000. An annual transfer of rupees 3,000 may be made from revaluation surplus to retained earning. The option number C is correct. Okay sir, understood? Yes sir. Now with respect to point number 3, what will be the tax base of an intangible asset? So tax base already we discussed, it will be 0 because entire development expenditure has been charged to taxable income of that year only. So of course the tax base will be 0. So option number D is correct. Chalega? Yes sir. Which one of the following is appropriate classification of annual payment of 12,000 to preference shareholders at year end? So can you say annual payment of dividend preference means whatever annual payment of 12,000 to preference shareholders, it means dividend. So if it has been classified as liability, dividend will be recognized as an expense, means it will be transferred to PL as an interest expense or dividend expense. Let's see what option they have given. Dividend, when we say dividend is actually not an expense. So they have not written dividend expense. So dividend expense and interest expense are same. So when they say dividend means it will be transfer retained earning. Got this point? The interest expense will be transferred to PL. So better option is interest expense of rupees 12,000. This is the correct option. But it is given annual payment, but normally interest expense is calculated by applying ER. So we'll assume that in this case contractual rate of interest and effective rate of interest will be same. Therefore contractual payment will become the interest expense. So that assumption we have taken because that information has not been given in the MCQs. In the above para. Got this point? Yes sir. Come to point number 6. So once again one para has been given. On 1st April 2001, Jain Limited subscribed for 40 million rupees 1 lakh note in C Limited. The loan notes were issued at 90 paise and were redeemable at 1.20 on 31st March 2006. Okay sir? Yes sir. Interest is payable on 31st March in arrear at 4% of par value. So 4% is contractual rate of interest. This represents an effective annual rate of return for J Limited, that is 9.9%. Means we can say it is 10% only, but 9.9% is the effective rate of interest. Jain Limited intention is to hold the loan note until redemption. So of course it will be initially measured at amortized cost until 31st October 2002. C Limited was a successful company with a good reputation for settling all its liability on their due date. However, due to an event which occurred on 31st October 2002, 3 of C's Limited major customer become insolvent, and this caused liquidity problem of C Limited. During November 2002, C Limited entered into negotiation with all the creditors, including J Limited. So some negotiation has been done. J Limited agreed to forego the interest payment due on 31st March 2002 and 31st March 2003, with the payment from 31st March 2004 and onward resuming as normal. What should be the initial measurement of financial instrument as subscription of loan in C Limited? So they have asked only about initial measurement, correct now. So they may ask also about impairment loss also in this case. Let me first explain this fully. Let me explain this entirely. You can see what is the contract date. So what is the contract date? Contract date is what? It is 1st April 2001. 1st April 2001. And it will be redeemable as on 31st March 2006. So this is 2002, 3, 4, 5 and 6. Means how many years? It is 5 years. Now what is the nominal value? Nominal value is what? 40 lakh. What is the proceed? How much you have received? The debt has been issued at a discount at 90 paise. Correct now. So 40 into 0.9 is equal to 36. So 36 become what? Proceeds. 36 become proceeds. Yes sir. And what is the redemption value? 1.20. So 40 into 1.2. Redemption value is 48. It means, can we calculate contractual cash outflow? So interest will be calculated by using which rate of interest? 4%. So can you say 40 into 4%? It is 1.6, 1.6, 1.6, 1.6, 1.6. This is the contractual interest payment. And what is the contractual principal payment? That is 40 into 1.2. That is 48. So of course, can I say we need to calculate present value of this? So of course, the present value of this at EIR will be equal to 36 only. Correct? Let us check it. Means present value at EIR. Why EIR we are taking? Because just try to understand. we need to find out what will be the amortized cost. So amortized cost will be, because this, whenever market rate of interest is not given, it means contract is done at what? Market terms. It means contract is done at market terms. Means the present value of this at market rate of interest will be this. And whenever there is no transaction cost, the market rate of interest in EIR will be same. Are you getting what I am saying? So if there is no transaction cost, correct now, in this case you can see there is no transaction cost, the market rate of interest will be equal to what? EIR. Understood? The present value of this will be equal to 36 only. I hope you are understanding. Just check it. Let us check it. 1.6, 1.6, 1.6, 1.6, and last may 48 plus 1.6. It is coming 49.6. We need to find out present value factor at 9.9%. Can we find out? Yes, sir. So 1.099 divide equal to, it will be 0.9099, then 0.8279, then 0.7534, then 0.6855, then 0.6238. Can you calculate this fast? Let us calculate this. So 1.6 into 0.9099 is equal to how much? It is 1.45584. Then 1.6 into 0.8279 is equal to how much? 1.32464. Then 1.6 into 0.7534 is equal to how much? 1.20544. Then 1.6 into 0.6855 is equal to how much? 1.0968. Means I'm just calculating to prove that it will be 36 only. However, if you are conceptually strong, you can directly write down 36. I hope you understand it. But in exam, always cross check if you want to cross check, because it contains 2 marks. Correct now? And it should be very much fast. So 49.6 into how much? 0.6238 is equal to how much? It is 30.94048 plus karo, plus 1.0968 plus 1.20544 plus 1.32464 plus 1.45584. It is approximately, you can say 36.02, means the answer is 36 only. Correct? So it becomes, the answer is 36 lakh. So option is given. Yes, option is given 36 million. Sorry, 36 million, because all the informations are given in millions only. Okay, sir. So 36 millions. Understood? The answer is 36 million. Suppose in this question they would have asked, what is the impairment loss? So what they have said, they have waived, they have forgo 31st March 2002 and 31st March 2003 interest. Correct now? So when they have approached the liquidity, it was on 31st October 2002. Means after this, correct now? 31st March 2002 means they have waived what? 2 and 3. 31st October. How it is possible? Jain agreed to forego the payment due on 31st March 2002 and 31st March 2003. Okay, means it is quite possible they have not paid 31st March 2002 and 31st March 2003 is also waived. So at which point of time you need to calculate impairment loss, that we need to find out. Of course, this negotiation has been done on which date? During November 2002. So November 2002 will be somewhere yahan par. Correct? So of course we'll calculate on this date. So whatever is waived, so this has been waived, this has been waived. So you need to find out the present value of this at this point of time by using the original EIR and then compare with the carrying amount. Carrying amount, the difference will become what? Impairment loss. The difference will become impairment loss. So first you need to calculate one amortized cost table. That will from that table you need to find out carrying amount as on this date, and then find out the present value of this as on this date. The difference will become impairment loss. If suppose they ask impairment loss also in this particular question. Correct. 36 million is the answer. Now let us come to point number 7. ABC Limited, a manufacturing entity, want to forecast its financial performance based on various scenarios to comply with India's guidelines. It took aid of artificial intelligence which can assist the company in generating accurate financial forecasts by analyzing historical data, market trend and relevant external factors. Of course, this is a question from accounting and technology, artificial intelligence. By leveraging machine learning algorithm, the company can simulate different scenarios such as changes in market demand, input cost or regulatory requirement. How will AI help the management of the company? Correct. Let's read the option. With the help of AI, the company can make informed decision. Of course, this is correct. With the help of AI, the company can assess potential risks. Of course, this is correct. With the help of AI, the company can develop the robust financial strategies in accordance with the India's principle. This is correct. Of course, whenever this type of questions come now, the answer will be all of the above. It is a smart work. देखो accounting and technology, you need to go through all the advantage, disadvantage, etc. Then only you can answer this type of question. So I hope you have done that chapter by your own. Correct now. But answer is, you can see all of the above. Let's see. Question number 1, our answer is correct. Question number 2, our answer is correct. Question number 3, our answer is correct. Question number 4, okay. Question 5, okay. Question number 6, okay. So all point we have done. So case study number 5 is also completed from my point of view. So MTP, all the case study has been done. MTP and RTP, all the case study has been done. So from case study number 1 to case study number 5, we have covered the case study. We have covered all the case study given in RTP and MTP. Okay, I hope you have understood. Thank you very much for today. Thank you very much for this video. We'll meet again in case study number 6. Till then, bye bye. Take care. Enjoy your day. Bye bye.